Monday, November 26, 2018, Monaco 64, home of alternative economics and contrarian views. This morning I want to have a second look at Goldman Sachs, Enron, and the '08 crisis, and a recent article by Martin Armstrong about Goldman Sachs, which one of my viewers had the courtesy of sending to me the link of. It's around 7:45 a.m. So before I go into that, I'm going to look at the markets, see what they're doing this morning, see what Goldman Sachs did technically last week and has been doing, and then go into the follow-up into Goldman. I made a video almost 2 weeks ago on the 13th of November entitled Will the BIS Save Goldman Sachs? Right? So let's have a look at what we're doing this morning. We've got spot gold up 3.5 at 1226.40. The range has been 1222 to 1227.50. So still stuck in that 20 to 30 range in gold. Very much in the trading range for the last week or so. Silver has rebounded a bit fairly well. It's up 12 cents at 14.40 or 0.8%. The range has been 14.25 to 14.42. We have the stock markets rallying this morning overnight. We had a bad close on Friday after Thanksgiving. But right now, the Dow is up 0.2% or 165 points, 24,436, the Dow futures. S&P 500 is up 0.75% or just under 20 points at 2649. Nasdaq 100 futures up about 0.75% at 6582. Currencies are fairly subdued. The pound is basically unchanged against the dollar, 128.10, in spite of the announcement yesterday from Theresa May. They got an agreement with the EU. I think that was the easy part for her. Personally, I think what she's done is she's gambled. You know, she's taken, she's agreed with an exit deal for the UK with the EU, and she's just hoping she can railroad the domestic, political class, railroad them into accepting this deal, i.e., the House of Commons, and according to the experts, we're going to have a couple of weeks where she's going to be trying to sell this deal really hard. I'm not too sure she'll get it. We'll have to see. The euro is a little stronger against the dollar. It's up 0.2% at 113.58. And the dollar is a little stronger against the yen, 0.25%, 113.25. Dollar is weaker against the yuan, 0.15% at 693. Crude is rebounding a little bit. It's up 0.2%, WTI just above 51, and Brent 59.89 or up 1.1%. 10-year yield, let's have a look at what we're doing this morning. Up 2 basis points at 3.06, the US 10-year yield. Let's have a look at the Italian 10-year yield. Well, that's down 13 basis points at 3.28. So things in Italy seem to be calming down. So what about Goldman Sachs? The follow-up on Goldman Sachs. And I'm going to look at Enron as well and show you how the chart of Goldman Sachs and Enron, Enron, for some of you who don't know, was a huge energy company. I'm not sure exactly, beginning of the century. They grew very quickly, highly connected company, maybe not as connected as Goldman Sachs, of course, because they probably wouldn't have gone bankrupt if they had strong enough political connections. I think Kenneth Lay, the CEO, he was a friend of George W. Bush, but it didn't help. So they went bankrupt. I mean, they topped in around just after 2000, and they went bankrupt into just before the end of 2001. So I'm gonna show you the charts of both Goldman right now and Enron back then. Compare, and I think you know, ominously the chart of Goldman is looking very much like the chart of Enron. And I like to say one thing. You know, even though Goldman has been a very well-connected bank, has been the poster child for, as I said yesterday in my video, for blowing up bubbles, for being well-connected, you know, revolving door policy with the U.S. Treasury, central banks, regulators. I like to say that I'm not saying everyone, every individual at Goldman is corrupt or has done wrong things. I'm sure there's a lot of people of Goldman that are just there doing a very good job. So that's what I want to say first. So you have the chart here of Goldman going back to the beginning, because they haven't been a public company, you know, forever. So you can see that in the crisis of 07, 08, that chart looked a lot like the Enron chart, but they got a reprieve. You know, they were bailed out because their CEO was at the Treasury, you know, a very well connected bank, so they got the public to bail them out. So they got a 10-year reprieve, and now it looks like they're back to that same position they were back in 08. You know, this chart looks horrible, massive head and shoulder. We've had a really big drop, and it's the same thing for Enron. You look into just at the end of the century, 1999, it started going up. It topped just before 2001. Massive head and shoulder, massive move down that we saw here in the middle of 2001. Just like we're seeing now, a massive move down in Goldman. We could see a rebound in Goldman still before it just turns around, you know, like a dead cat bounce, turns around and drops all the way to zero. And you might say, you know, Goldman is not going to drop to zero. Well, but I'll look into the article from Martin Armstrong, and I have to say I don't agree with everything Martin Armstrong says. I used to read him a lot before he got out of jail back in 07. We used to get his handwritten reports. They were really interesting. He still makes, you know, does interesting reports. And his latest is, and this was after I made my first video, which is entitled, Will the BIS Save Goldman Sachs? And why the BIS? Well, because the BIS is basically the bank that regulates the too big to fail. And they kind of protect and shield these big banks from criminal prosecution. But as you will see in Armstrong's latest article, it could be very difficult for Goldman Sachs to protect itself now. And the article says Goldman Sachs going down on the pie target. So yeah, this article was from the 23rd of November, so very recent. So he looks a lot at cycles, and he thinks Goldman could actually disappear in the next year. And I was surprised, you know, that I'm not the only one seeing this. And you have to go through the article, but the gist of it right now is that it turns out that Goldman has, you know, screwed sovereign governments, you know, and that's why it might be very difficult for them to get away with things. They talk about the Libya case, that the Libyan Investment Authority has a case. Then they talk about Greece, how before Greece adopted the euro, Goldman Sachs helped the Greek treasury to hide a lot of debt, and that's one of the reasons why Greece had their debt crisis. Greece paid them $600 million to do that. They talk about a lot of other things as well. So what does it say? What does he say here at the end? And I'll read some of Mr. Armstrong's comments. Here we have 2007.15 when Goldman Sachs sells precisely at the top of the ECM back in 2007, which was a $2 billion synthetic CDO. It was then on the pie target when the SEC charged Goldman Sachs with fraud back on April 16, 2010 for that very transaction. Any small firm is imprisoned and stripped of its license, but Goldman Sachs has the SEC and the DOJ in its back pocket, along with the judges and politicians. And he goes on, this is the important part. Now again, on the precise pie target, Abu Dhabi, yeah, that's the other country, Abu Dhabi in the Middle East, filed a lawsuit against Goldman Sachs Wednesday, November 21st, just last week, for allegedly conspiring against the Middle Eastern Fund to further a criminal scheme by Malaysia's scandal-plagued 1MDB. 1MDB is the Malaysian Development Bank, and there's a big scandal out now about Goldman Sachs in that. And he goes on to say, because we have 3 countries now bringing charges and or suits against Goldman Sachs, it appears that this will mark the beginning of the end for the firm. When the euro cracks, they will also be blamed for their role in Greece and the rest of Europe. Don't forget that Mario Draghi, ECB president, is also ex-Goldman Sachs. Well, he was probably involved in that deal with Mark Carney, I would add. Mark Carney used to work for Goldman Sachs. With the deal that helped Greece cook its books so it could get into the euro. So I repeat, don't forget that Mario Draghi is also ex-Goldman Sachs. When the euro cracks, there will be a microscope applied to every communication that was ever carried out between Draghi and Goldman Sachs. Every trade they have pulled off will be inspected with its tentacles into the European bond market. And to conclude, he says, after the government took down Salomon Brothers back in 1991 for manipulating the U.S. Treasury auctions, Goldman Sachs began a program of buying protection. They allegedly began aggressively funding politicians and then began stuffing their people in key places of government. They have been known as government sacks among dealers, and they have held a powerhouse political hand in their back pocket. Our model at least warns the day is now over. So and he points out he points out as well, just another note, Trump's administration was infiltrated by Goldman Sachs. It will be interesting to see to what extent Gary Cohn was involved in this deal of the century. Some allege he resigned after finding out the firm was under criminal investigation. Trump should distance himself immediately from Goldman Sachs and remove anyone in the SEC from Goldman Sachs instantaneously to prevent any influence whatsoever. Well, the next head should be the Treasury Secretary, Mnuchin. So there you go. I'd like to also talk a little bit about the last crisis of 2008. I showed you that chart. I said Goldman should have collapsed then. That chart looked just like Enron. They were given a reprieve. And just to show you that it's not just me, some guy, on his own in his study in London saying this, but one of the reasons, I've been saying that the crisis of 2008 was only like patched up, and they've only extended, they've only delayed the final crisis, is one of the comments by Hank Paulson. He was Treasury Secretary at the time. This is just a few days before Lehman collapsed, or the day Lehman collapsed. I'm not sure. It's a documentary entitled "The Last Days of Lehman Brothers," and I'll put the link to this video below in the description and up in the cards. But one thing that he said in this video that always, stayed in my mind is this, and I'll play it for you so you can listen to it.
The West is fucked. We fucked it up. Oh, not just you and me. All of us. The West. It's done. It's over. You want to call it a game? This is the game. You want your great-grandchildren speaking Chinese? The dollar is going to go. We had Rome, then Europe, then this. Us. This thing with cars and stereos and hula hoops. And we screwed it all up. We ran through it all. This stuff. And we've come out on the other side where it's... I don't know. Where is this place? Oh yeah. We have this one weekend where maybe we can come up with something to hold it all together a little while longer.
So there you go. This was hold it all together a little while longer. And it's been almost 10 years, right? And this was a meeting of all the major CEOs of Wall Street with Hank Paulson, who was a CEO of Goldman Sachs a few years before. And at this time, he was Treasury Secretary of the Treasury. And they're meeting in the boardroom at the New York Federal Reserve, Liberty Street, number 33. And that's what he said. We can try to fix this thing this weekend. They let Lehman collapse, of course, but then they had to come in and bail everyone out and throw all the money at it. But you see there that Hank Paulson said that it's over. The West is, effed, and that the dollar is finished, and they can hold it on for a while longer. So will this coincide with the Goldman, the next great financial collapse? Goldman Sachs, will it be gone? It could be. It could be the big, the black swan of black swans. If you enjoyed this video, please give me a thumbs up, share it far and wide, subscribe to my channel if you haven't yet, and you can also follow me on Steemit, DTube, and on Twitter. I'll talk to you later. Take care. Bye.